Hey everyone, this is GreenSpud Trades, and in this video I want to talk about the video that I put up a few days ago where I went over the Bitcoin chart. And I like to use the Grayscale Bitcoin Trust here as the chart for analysis just because I could load it here into Thinkorswim and it's tightly correlated to the price of Bitcoin. Although this is not actual Bitcoin, it's a pretty good representation of it. And in my last video, I said that this is an interesting area, how it's bouncing up and down in this channel here. And this area might be an interesting place to buy because you're at the bottom of the channel and you have a good risk reward, I guess you could say. But after looking at it today, something that I don't like about the price action is that it has this kind of bouncy effect to it. So whenever you see a price chart make a high, and the slightly lower high, and then it starts bouncing like this, kind of like a basketball that's dribbling and it's running out of energy. That's usually a pretty bearish sign because that means that it's gaining momentum, that it could probably go below that support level. And likewise on the opposite side, if this chart were upside down and then you saw it like pushing up against a resistance area, that's a very bullish sign. But the fact that it kind of retreated here and it's kind of looking heavy, I don't like that too much. And honestly, I'm a little bit surprised that Bitcoin is not doing better in this environment. I know there's kind of a little bit of a crypto bear market right now, and maybe some people are just capitulating, I guess. But you would think that with the news events going on, with like the Russia-Ukraine war going on and all the uncertainty, that would be a driver for Bitcoin because, after all, it's supposed to be a kind of universal currency that is independent of government. And, people, I guess, think it's an inflation hedge type of asset or a shit hits the fan type of asset. You would think this would be the type of environment for where people want to hold it. But that doesn't seem to be the case here. So if it's not for this type of environment with a lot of uncertainty, then what is it for? And that brings me back to the gold chart that I was talking about before. As you can see here, we had like kind of a little spike that kind of cooled off here during the day. By the way, today, the 24th, last night, Russia began day one of their large-scale invasion of the Ukraine. And I'm not going to get into the politics of that, but it is kind of a destabilizing event for the world right now, and that probably has had a negative consequence for the stock market. But as I said like a few days ago, the gold chart looks bullish, and I still think that is the case. Now, because of the environment that we're in, I am not really comfortable looking at individual stocks right now, so I'm just kind of looking at the big picture and the overall indexes. And the SPY is something that I'm looking at as well. I just think right now it looks pretty bearish, and you could probably even make an argument that this might be a little bit of a head and shoulders here that started at the fourth quarter of 2021. You could say this is a shoulder or a head and another shoulder that's making. So maybe that's a bearish sign. I don't know. Something that could probably happen is we get a little bit of a relief rally because it's possible that this Ukraine situation could be resolved very quickly. If they come to some sort of a deal that ends the violence and we get some sort of a ceasefire, that would certainly be good news for the market, in which case the stocks could pop. There'd be a lot of immediate short covering. But as far as that being a resumption of the bull market, I'm not so certain about that right now. There's a lot of general uncertainty. And look, we're only down about 10%. So I've seen markets that have done a lot worse than that. Something that I've been prone to happening to me in the past as a younger trader is kind of overestimating the impacts of news events. Like when I was in college, I always thought, oh, this news event or that news event has caused the market to go up or down, when really I don't think the news events themselves matter as much as the price action. There's a lot more going on to it than a news event being interpreted as good or bad for the market. I mean, a lot of news events that seem really bad and are catastrophized in the mainstream media, they turn out to be kind of not that bad. And in fact, they might actually be a really bad thing from a newsworthy standpoint, but for the stock market, it may not make such a difference. The stock market isn't necessarily correlated to what's going on in the world. You know, a good example of that was the big COVID drop that we had. So when COVID happened, we had like this 20% drop in the market in 2000. And it was kind of a V-shaped recovery where, even though life was a mess for a lot of people in the year 2020 and there was mass rioting going on, the stock market began a new bull market cycle. And here we are. And this lasted a number of months. And maybe we need a little bit of a correction here before it could proceed further. However, one thing to consider is that what we're looking at here might just be the beginning of a longer down cycle. We not only have this geopolitical uncertainty going on with Russia, military action is probably bad for the markets because it creates uncertainty, but you've also got the Fed raising interest rates, which is going to be a headwind for the market as the capital, the easy access to capital gets pulled out. So something that I'd like you to take a look at here is what I saw in the markets back when I was in high school, back in the early 2000s when you had the recession going on after the tech company bubble, and then you had the 9/11 type of thing happen. This was quite a long bear market because look at what we topped out somewhere around the year 2000. And then the market didn't do so well for a good 2 years before it bottomed out. That was a pretty rough time for investing. And I think we have a whole generation of younger traders now who haven't seen anything like this. You know, if you started investing in the early 2010s, you haven't seen such an extended bear market cycle that goes on for 2 years. And some of them, there's no reason that it can't go on longer than that. You've also got problems of demographic trends. You have baby boomers retiring and getting old, and you might have population decreases overall. What's that going to do for growth going into the later 2020s and the 2030s? It might provide a headwind for the markets overall. We could end up in a Japan-like situation where we're stuck with really low interest rates and asset prices just don't go anywhere. And that could just be what the normal is for a very long time. I don't know. But what I'm going to be doing is just watching this day by day and seeing what the price action in the market tells me. But yeah, going back to this chart, maybe the Ukraine crisis gets resolved really quickly and the bull market resumes. I think there's a lot of uncertainty. It's a little bit early to tell whether that's going to happen just yet, whether we'll have that type of V-shaped recovery. I think this 10% down is nothing. We do have the headwind of interest rates going up, and we might have the general supercycle of population and consumption ending, which might change the investment landscape going forward. So that's something to think about. Is this just a little pullback correction, or is it going to be a longer multi-year bear market? So be sure to subscribe to my channel, hit the like button if you found this interesting, and I'll see you in the next update.